overnight inventory is short. If we get above the 0-day back fractal, it opens the door to coming back to 0-day back proper and the developing upper edge. Current market is selling down. We've sold down into the fractal from yesterday's session. Below that opens the door to return to the 1-day back 1, 2, 3 stack below. Buyers at this level here open the door to higher prices. Good morning, Ra. Juggling all sorts of stuff around here, so it's going to be chaos for me for the next, I don't know, little while anyway. So I snapped up a long off of this test here. I'm not sure where it's going. Overnight inventory is really short, and we have the potential to squeeze them out, especially if we can get above this drop here and get back to the HUE or developing upper edge and find buyers. But the sentiment definitely is short biased right now, which opens the door to a retest of this level and then a falling out and a return to the 1-day back below, which makes good sense uh, to go down and reload the guns before we make a move higher. So essentially, a long off of here is just a continuation long in the overnight price action. It isn't necessarily uh, it's kind of counter trend to this leg here. So we got overnight low. If we lose overnight low and this fractal, then it opens the door to the 1-day back test. And to the downside, we have some decent stats. We did open higher in range here. So P mid down at 911 is still a 67% stat. So overnight low test proper. We'll see if this thing folds up, then it's going to change the dynamic, and it looks like we have sellers here. So scratch on that, and if we can't get above developing VWAP, then it's probably banging down to those lower stats. So developing VWAP is going to be the fractal over under for a return to any higher prices. Otherwise, I'm targeting the 1-2 stack down below. 1-2-3 stack. And just going to look for a place to get into it. Because I was wrong on the first move. Go figure. Meltopia. we do have a potential for, there's another fractal in here. We have a potential for a rotation off of it. This fractal comes from the day. Get some bigger bars here. I don't know why these are hundreds. We need thousands. We need thousands. We need thousands. Just looking for that 1 day back stack now. I got long on that little pullback, or short on that little pullback, and so we have the launch from the lower edge down here, from the last seller in the market is front running at the micro composite. So potential to catch a bounce off of that in the same way that we caught a bounce off of this fractal, and it may continue lower, or that could be where the buyers are found. So watch 20 closely, 20 and a quarter closely, and see if you can slow roll this thing all the way through the 1 day back. That is the magnet. And it's a little harder to do without bookmap, but if you can manage with delta checks, um, you can possibly stay in this. And then remember, it has the potential to rotate on both sides of balance. So dipping down into the 1 day back, the lower edge is all the way down at 911. Low hanging fruit is either this launch here, okay, on flat. Uh, the launch, the launch is kind of that, just like it's just like the intraday launch. If we lose that launch or return to it, it opens the door to come back to the the next check down. If we find buyers at that, that's similar to fractaling out the session and finding buyers in front of the 0 day back, say. It's at the halfway point of the session. And so if we come to it, that pretty much says we're right where we belong and that we're not going back to the upper edge. Sellers heavy in the market right now, and they have the potential to get squeezed. So there's the 1 day back proper. Now 911 is the downside edge of this, and if that lower edge at 911 falls, then we have the potential to range explore lower, and we would be in that higher historic time frame sandbox. It is not unreasonable to think that we might find buyers at the 1 day back check, and particularly at this historic lower edge, but it's going to depend on how deep the market wants to go. Historic time frame wise, we are looking at the potential to return to that upper edge and higher time frame wise, but we may not. This we not, may not. We're not going to go up in a straight line, and clearly sellers are in the market here. So until we get a nice impulse up and a rejection of the lower edge, I think all roads kind of lead to a deeper price cut right now. But we're above the 1 day back. And so from a higher time frame perspective, from the intermediate time frame perspective, we're still in potentially bullish territory. Um, this was tradable, and now we're at the magnet here. So we're gonna see what happens here. This we could get some chop in here. We could have all kinds of just kind of nastiness. So I want to see an impulse up, take out this drop edge here, maybe developing VWAP. Maybe we have to give it up, uh, give up the early part to get into the late part of this move up if it comes. I don't want to get too cute here because it it has the potential to rotate on both sides of this. So I want to see this lower edge hold here. Before I say too much, I want to make sure I have enough on here. I want to see this edge clean down here. Yeah, we're basing out a little bit at this 1 day back. So there's our lower edge down there. It's actually at 9. So as long as we hold 9, we have we are still in bullish territory. If we lose 9, and this is on a 1500 tick bar chart, this is the lower edge from 3 days ago. If we lose that edge, then we're in the historic time frame. Keep that on your radar. What do we have here? Uh, we got P mid. I'm just looking at what retail is looking at. I do wish I had. Oh, this is yeah, this is. Is there a VPOC in here from yesterday? You would think so. Okay, there's a nice little pop there. Not really, uh, not really the impulse I was looking for, but a break from that microstructure. So I want to see more of an impulse, something that moves up to developing. VWAP. This looks like it's finding some buyers in here. So we want to see that move up to developing VWAP and then see what happens if we get up there. What happens when we come back to the lower edge? We want to fill some of this space here. Maybe 23 and a quarter would be a good location. We lost the lower edge, and that just means we have the potential to rotate on both sides of balance. This is balance. Still overall, higher time frame wise, bullish above 11 and a quarter. Or I said 11 and a quarter, it's 9, bullish above 9. But we got to see something to confirm that buyers are in the market. And right now we haven't seen it. We saw some retail buy this up, but then they got smacked down. Yeah, I don't know where BPOC is from one of those 3 days back. I think it's been traded through. So we've got an old one down here. Oh, Yeah, buyers are still coming in. They're buying these dips up. So we had a break up and a retest. This is potentially a long on that retest. It's not a breakout of the price action though, and I don't particularly like that, but it is consolidation break up, break above. So it's doing some work here. All right. We have a VPOC, yeah, here from somewhere. I don't know what day that's from. That's from 11/19. Okay, there's the 23, and now I want to see this lower edge hold. And then we have another one. What the heck? Oh, that's today's. Okay, so the 11/19 VPOC's down at 88. 87, we'll just say 88 square. So not really anything there super compelling. Now we broke out of that consolidation down at the 1 day back, broke up, failed the developing VWAP. Now I want to see what happens here at this lower edge. See if it prints or if we fall out again. So next check to the upside is going to be developing VWAP if we find buyers, and then the context shift for the session would be a test of this and then a test of this drop and then the lower edge holding. And may never get back to the lower edge. That's kind of the thing. But if we go up there and refuse the lower edge, that's saying something about the session participants. So still heavy sellers in the market. But seeing a little bit of folding over here. So we still have that 9, that lower edge at 9, potential down to there. And look at where that stop pick went, right into it. So sellers hit it hard and it got absorbed. Interesting. So down to that lower edge. And that lower edge to me is the last stand for longs. If we lose this lower edge and we see sellers coming in force, then we're back in that historic time frame price ladder. If we see uh, buyers step in at this lower edge, it opens the door to the price checks at developing VWAP, the drop, the rope, the 0 day back. So watch delta. We want to see the delta roll over, and it's not going to go green for a while, but we're going to see the delta increase. So it's right now it's negative 3,000. We're going to see those numbers reverse. So if it's going up, we'll see this going down, 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 or yeah, down, up, 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 towards zero. But step one is we gotta test the developing VWAP. So still don't have that impulse. We're basing out here, and we can see the higher time frame participants reloading in whatever direction they're going to take this thing. This is a likely location to go either way, really, to break up off of the return to the 123 or to gather new sellers and leg this thing down on a rejection of this higher time frame upper edge. Now, the higher time frame upper edge to me makes good sense, but it may not even manifest. I really have no idea what it does. So right now I'm looking for an impulse off of the lower edge up to the developing VWAP, up to this fractal, and then the lower edge to hold. And as these VWAPs get dragged down, particularly the drop in developing, all of this is migrating down because of this here. As developing VWAP gets down, I'm going to start be more focused on this because this isn't going to be a breakout anymore. This is just part of this structure here. So I want to see a break from this structure, and developing VWAP isn't going to be the look I'm after. I'm actually going to want to see it get above that and then retest something that breaks out, and that's going to be the drop. So the short for me was the low hanging fruit down to the 1, 2, 3. And now I'm looking for, are we going to fall out of the bottom or are we going to break up? And this is really where the higher time frame theme story comes in. And you can start thinking about what we're doing in the next time frame. So if we've returned to balance, the 1, 2, 3, what is the other time frame saying? So this is nearly a check on the historic edge, and this is actually just chop at that historic edge. There's a micro composite in here. It's a 3-day micro composite right here. So now 4 days of balance. I had that identified. And potential to return to both sides of that. So that's where the 1, 2, 3 stack comes from. So lower edge at 9, a stop run into 9 makes good sense. And I expect buyers to come in here above 9. If we don't find the buyers and see sellers come in, that would be an ill omen for the long side. But right now I'm just stalking. Let this thing set up. down to that lower edge and back to retrace to the 1, 2, 3 stack. Still no connection to developing, still no connection to the drop. Everything kind of leans to the south still. Delta very much showing sellers in control here. And back to that lower edge. So it's looking like the market's looking like it wants to pull back. We'll see if anything buys it up. I want to see this break above all of this consolidation here and probably range X to the contextual shift level up here. Before I think about this thing going to the upside. So certainly if you wanted to trade actively, you could trade the 1, 2, 3 stack rejections. I don't know. This is not my kind of trade, my favorite kind of trading here. The move here was the best move of the day. And until we fall out to the south, uh, and then we should talk about what that south might look like back inside that historic time frame price ladder. Let's see. So sellers definitely still present. So now we've fallen out. Next stop 900. And then we got previous point of control way down at 88 as the next statistical with a 65% chance. So gonna want to see a little pullback to align with here, if there is one. I really have no levels in here until that naked virgin down there. So we got to return to the stack at 891, higher time frame, 88, naked virgin point of control, micro composite down at 79. So we have some downside targets here. Potential to rotate on both sides of the 1, 2, 3 stack. We're looking for buyers. And we're at the historic upper edge. So 92, 88, and potential down to 78. Disappointed I should have held, or at least aligned here on this short. We have pretty good price action here. The 1-day back rejection at this micro balance. Woulda, coulda, shoulda. So this 91, 92, 93 level is mean reversion on that old rope. And that rope got some love back here, 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 here. And point of control at 88 here. I think that's the last stat. And then there's a micro composite down below that. Oh, we have value area low and P low down below that. Neither of which have great stats. Yeah, that was a great short opportunity, to be sure. I was really feeling like the market was looking to go higher. That might be what you get for feeling. So into balance, old balance, potential to rotate on both sides of that balance. We got a price check on the previous point of control. We did not see a this market looks like it's still selling. We have hard delta to the south. Uh, we've got value area low and P low down below. Anything below this drop here is shortable. Anything below this drop is shortable. But of course, with tempered expectations, This is looking like the big magnet here, 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 and here. So price check. So far, a rejection of that upper edge. This is not looking good uh, for the short term. This is looking a little corrective. We, we need to get into that higher time frame upper edge, or things start to look very different on this chart. And we have the potential back to here. We're losing the 2, the upper edge, potential to come down and retest this, and that opens the door to a deeper check here. So we need to see, do we got anything geopolitically? Take a breath, step back. Is it is it is anything I'm saying confusing or uh, distracting to you? Because I can just hit the mute button. Um, I know I was talking about a long, but I was talking about stalking along, and I don't want you to think that I was pretty specific about what I was looking for, and it didn't happen, so there wasn't a long. But if it's confusing, I'll just silencio. The long hanging fruit here to the upside is to this rope here. I want to see price come up, take out the drop, take out this edge here, potential short back to the lower edge. Why? Because we haven't taken out the 0-day back context shift. We haven't taken out the developing. So these are all continuation short ideas. Back to this rope, back to here. And it could be done, no idea. But contextually, we're 3 fractals down. This fractal is a fractal of the 0-day back fractal, and this fractal is a fractal of that. So until we get a move, an impulse up that starts with taking out this, we don't have a contextual shift here. Now we did come in contact with that microcomposite down there, so that's worth noting, but it's not enough to take a long off of, just worth noting. And we're coming back into the ropes. So we're seeing some buyers. We're not seeing it flip in the CVD, but we will eventually see that if it's going to go up. Step one is we need to take out the shorts from this leg here. They're right here. If we can get above this and find new buying, new willing buyers, that opens the door to return to this, which is the fractal from this balance at 1-day back breakdown. And then we have the developing, which is a fractal of 0 fractal. So we have some upside checks that we have to make. I would say for this to be contextually different, we have to take out at least this. and then find buyers at the lower edge. Now we came back into here. This is a short opportunity for a continuation lower. If this doesn't send it back to the lower edge, that's saying something, and I'm carrying that forward. But my long is going to come from a test of this at a minimum, preferably this and preferably this, and then a retest of that lower edge. So short of that, short of coming back to here and then retesting the lower edge, all I've got is shorts. And that might mean you miss, so a big impulse off the bottom. But that's just the way it goes. What had you leaning to the upside? Like what about the market made you think it was going up? And I'm going to say this very dramatically, but this is the price action here on the day. And I put these colors on this chart for a reason. What about this says upside? Once we got below here, everything about this chart says downside. The delta is down because the bars are red. Sellers are present because we're below all of these VWAPs. The fractals are getting rejected. Yeah, trap shorts, but you're looking uh pretty short term. So you're looking, and there might have been a long here. There might have been a long from like overnight low back to zero, but we couldn't hold zero. And if we can't hold zero, that opens the door to return to one. And so if we can't hold zero and we can't hold the zero fractal, that opens the door to one. If we can't hold zero and we can't hold zero and we can't hold developing, that opens the door to one. So go back and look at the last screenshot that I sent this morning, and think about what needs to happen in order for this market to go up. It needs new buyers. And so who's really on the hook here? Well, in the overnight session, longs were on the hook, or yeah, longs were on the hook because it was bought up. And so if those longs are on the hook and we can't rescue them here, anyone who got long here is fucked below this edge. That's the average position at 0 day back. So they're backwards here. So longs are getting murdered right here. And longs from yesterday's launch are getting murdered below here. And longs from yesterday proper are getting murdered below here. So the people that are on the hook, the people that are vulnerable, are the longs from thinking about getting some bigger bars here, are the longs from down here. You were looking at the shorts from here being on the hook, and they were on the hook until here when they became right. And then we're playing into these people here. And so if we turn some more VWAPs on, we can see the edges get wrecked. And then when this lower edge falls here at 9, that's when all of the shorts from this leg get destroyed and we start coming down lower. It hasn't changed anything in the historic time frame. The historic time frame is still up. This is just regular old price action doing price action things. Now we have a move off of the bottom, but in the context of all of this selling, that we have this is early, but we have a move off of the bottom. We took out the average short in this leg here. If this edge holds and we take this out, it opens the door to here. It's still counter trend on the session, but it's the market is up. And so if you wanted to get in here, you could have got in here, but that would have been like ridiculously counter trend. Even taking this out and getting long here is ridiculously counter trend because the trend on the day is down. There's nothing about this that says up yet. The criteria for it changing is if we can get back to the drop from 0 day back and then hold the edge. And that's just a generic context. And since we never accomplished that, like during the session, this is the drop from 0 day back. We opened at it, rejected it. That's the short back to here. And then there's another short here. You can see the chop, the breakdown, and the rejection of that balance. There's another short for continuation lower. And now we've come down into this price action down here. We based out. We took out the drop from here. We found buyers at the edge. Out of context, long, back to here. But out of context because the context is down. So when the context changes, in my opinion, is when we come to the halfway back here, the drop from 0 day back. Why here? For the same reason as this right here. When we come down to here, break that and hold the edge, that's a potential long. Back to here, hold for here. Out of context. This is still out of context, but this speaks of the potential for a context change. And so if we take out the shorts here, these guys are getting squeezed right now back to here. Anyone that got in this consolidation, and my thought is this is higher time frame participants buying up with retail selling into those higher time frame participants. Hence, I put the buyer's VWAP in here. I think the higher time frames aligning to the long side here. It makes sense to me. And so if that's the case, when we find the buyers down here, hold the edge, retest here, retest here, a test of this, back to the lower edge, holds, opens the door to developing, to context shift. Back to the lower edge, holds the potential to go to 0 day back. So that's how I'm reading this context shift, like as it unfolds. I'm just looking at like what price checks are taking place. This is still a contextual short opportunity back to this lower edge. But I'm not really looking for a late in the day short. I'm looking for a long opportunity and a reason to get long. And that's probably not going to come until we connect with developing VWAP, this context shift, and then refuse to test that lower edge or test it successfully. So right now, I don't really have a whole lot to do other than kind of stand by here. I think you have to be careful with your bias, Ra, and really just objectively trade the chart. And I think that starts with your thesis in the morning and developing like a detailed understanding of price action. And so um, starting with like your thesis this morning, I'm just going to be honest with you, it was kind of lazy. I can't figure out neutral. You know what I'm saying? Like I think you got to do better than that. I think you have to really like develop an understanding of what the potentials are. And they can be wrong and learn from that wrong. But like develop that understanding of what you think the potentials are and then reassess. And so there's really kind of four scenarios that you can come up with every day. You've got a rotational neutral scenario, a bearish scenario, and a bullish scenario, and then you've got a gap and go scenario if we're gapping in a direction. And you should come up with like a pretty clear like where the edges are in those time frames and like how do you get aligned with it? And how do you not get aligned with it? Like you heard me saying here, well, we're at the 1 day back. I'm looking for longs to step in and take this thing higher, but I was looking for some very specific things to occur. I wanted to see developing VWAP get tested and then see that volume. And then when developing VWAP started dropping down, I said, well, that's not enough to test that anymore. I want to see the drop get tested. Well, those things didn't happen, so that takes the long off the table for me. Unfortunately, I didn't catch the short, but there was a short right here, and that's fine. But now we have either the potential continuation short on rejection here back to the lower edge and hold for more. If this holds and this lower edge holds, then maybe we see that developing check. And now we have range back to here and the zero. But we're in a different scenario. Now we're looking at mean reversion to the 1, 2, 3 stack from below and potential to rotate on both sides of that. So I don't know if this is the end of it, but you can see we're starting to build some buyers in here. We're starting to push, explore higher on this. The potential is to squeeze people out in here, and that would be ideal. But where we get aligned to the long side, that's a harder question. So we got a 930 check in here. So IB is printed, right? Somewhere in here. This would be an ideal IB continuation trade because it's aligned with a deeper price check, taking out the shorts from here, coming into the shorts from here. This is a check of this balance. This opens the door to here, looking for a connection to the lower edge on any of these to hold for a continuation higher. And may not get you may not get the check. This might have been it, the last time it connects here, and then you have to say, okay, well, what's the story here? Is this story uh, that we're done to the downside? I mean, we missed the micro composite check. The IB60 printed way down here. So there's a potential retest on that, but I don't think we're going back to the IB60 unless we can get through here. And this is potentially a context shift here. So we have sellers at developing VWAP. If those sellers can't get it below the edge, that opens the door to a retest here. If sellers don't even bother, it opens the door to a retest here. And this is our context shift on the entire session, the drop from zero. If we get above this and either fail to check this or refuse or check it and find buyers, that opens the door to the zero. Doesn't mean we're done to the south. It just opens the door. Whether we walk through it or not, it's a different story. Sellers at developing, retest this rope, retest this rope, retest this rope. These are irrelevant now. We've traded through them. The legs that we're trading against now are the lower edge and these ropes inside of here. So developing we'll leave on the chart, zero we'll leave on the chart, but the fractals are just the participants from where we left. So we left the zero fractal here and created developing as a fractal of this fractal. So try and I mean it's really hard not to have a bias, you know, especially if you have skin in the game in another time frame. Like, you know, last week, and I don't even know where it was that I bought, but you know, I bought um, a decent sized position for my 401k. So, like, of course, I want my 401k to go up. It's worth fucking way more than anything I make today, you know? Like, I want the market to go up. I've got skin in that game. And, and that, like, that fucks with my ability to have a neutral position, an open mind about what's happening today. So I'm already charged. Like, of course, I want to go to the higher time frame upper edge, pop the top off of it, and go to the moon. I'm like, I don't care what happens today, but from my job's perspective, I have to like let all of that go and just create the narrative around where does this structure fail and where does it open the door to below. And so contextually, there's a short at developing VWAP, back to the lower edge, and potential for more downside in the developing context. Not in the higher time frame context, not in the historic time frame context, but in the developing context, this is a short opportunity back to this edge. Now, if something is changed in a developing context, that doesn't work out. We don't go below this edge, and then it's still a counter trend, counter to the developing context, long opportunity, back to developing, back to here. But counter trend in the developing. So it can be aligned with every other context on the map. If it's not aligned with the micro and the developing, it's going to fail. So from a historical time frame, we're still bullish. From a higher time frame, where we've fallen out of the 1, 2, 3, but even in the higher time frame, we're not bearish. It's just neutral. We're rotating the potential to rotate around the intermediate time frame VWAPs. So think of time frames in this way. If 0 day back is session balance, we have the potential to rotate on both sides of the 0 day back balance. If 1 day back is intermediate balance, let's just say it is, even if you have a different definition of it, use mine for a minute. If 1 day back is intermediate balance, we have potential to rotate on both sides of that. If 2 day back is higher time frame balance, so we only count intermediate as 1 day, and then once we get to 2 day, we're now in the higher time frame price ladder. If 2 day back is balance, we have the potential to rotate on that around both sides of that. So look at the historic time frame balance as the upper edge, or wherever the rope is. So this is historic time frame balance here down at 891. That's not something that we can activate off of. We activate off of the developing time frame inside of the intermediate time frame. So if the developing time frame balance is here and the intermediate time frame balance is here, what do these drops represent? The drop from 0 day back is just balance from when we left balance. The drop from here, and this actually, like in a perfect world, would be anchored where we left it, not here. But since it's developing here and it would have been here, it would have been slightly below and probably is what we connected with here. And I'm just going to drop it here and we'll see. But when we left balance, we left it here. Can you see where we went to? Here, here. So details matter. Like, yeah, we had the developing VWAP, but where we left balance is here. And that creates the fractal that we rejected here and here. And we left it again here. So we can balance, we can drop that. And then we left it again here. Last time we touched it, that creates a fractal there. And then the last time we touched it was here. And so we don't have to do this with everyone because we have the auto VWAPs. But if you were going to do manuals, this is how I would do the manuals. And you can see our anchors are getting closer together on each time. We're not leaving in dramatic fashion. And what these are doing are replacing the manuals that we have automatically doing exactly what we're doing here. So here's another one here, and then another one here. And you can see how our anchors, we're no longer leaving, we're actually staying in contact with them. And we're having to anchor more and more and more. The reason that that's happening is because there are things shifting in the market. We're not impulsing as far. We're just grinding. This is a grind. And then the last anchor that we have here is going to be where we left right here. And then we curl under. And now you can see all of this grinding is creating a back and forth. And now we're finding support at it. Doesn't mean that the context has changed in the global, just that if we were gonna skip this, this is how we would manually anchor this, and we can see that price came up and supported that edge and found buyers, which opened the door to here. This opens the door to here. This opens the door to here. Failure to test here opens the door to here. Failure to test here or buyers at this edge opens the door to here. So it just becomes a price ladder that we can check in reverse. And all of that's happening automatically in our in the ropes that we create. So contextually, every time we take out a higher time frame level, and higher time frame being this drop right here, find buyers at the edge or don't check the edge, it opens the next one higher. Find buyers at the edge or don't check the edge, it opens the next one higher. Find buyers at the edge or don't check the edge, it opens the next one higher with a mean reversion to the 1, 2, 3 stack here, still hard in the market. I mean, this is a realistic place to go. So take all of those off, 1, 2, and 3 off, and consider just the developing time frame. If this edge gets bought up, what does it suggest? A return to the other side of balance at the upper edge, the higher time frame upper edge, irrespective of the 1, 2, 3, the 4, 5, 6, the 7, all of those higher time frames, they don't matter. We're trading against the people who are short in this leg. They're the fuel that get us up to here. And then to get out of this intermediate time frame theme, which we've traded through. So this is just balance now and potential to rotate on both sides of that balance. To get out of the developing sandbox, we have to break out of this upper edge. And that gets us the potential to get into the higher time frame price ladder and continue checking higher. Right now, we have the 1, 2, 3 as our upper edge. Our last unchecked edge is this 6-day back up here. And we've for all intents and purposes checked it. So maybe the next one is the 7-day back up here. So if we run the stops through here and find willing buyers above the upper edge, we squeeze out the shorts from the session, from the overnight session and the developing session, all baked into here. And now we can start pushing up to try and take on this 6-day back edge and potentially range expand up to the 7-day back. And so having these ideas sorted out in your head of where each time frame fails and what might have happened in a higher time frame, and if what happened in that higher time frame, if we found the buyers here and they've rejected lower prices here and we've expand range to here and rejected lower prices here, not because of this drop, but because here, this is incidental to here, but these are buyers. Think of these higher time frame accumulation. The higher time frame is accumulating all of these positions down here on the way down. So retail selling into somebody buying it. These are buyers. These are the important buyers. So if the important buyers aren't letting it go below here, and they're not letting it go below here and here, these buyers that came in here on this drop right here, they're not letting it go below here, that opens the door to here. If they're not letting it go below here and here, it opens the door to developing. If they're not letting it go below here and here, it opens the door to the context drop. If they're not letting it go below here and here, below the context drop, then it opens the door to zero. Just keep singing the song. Keep, and in reverse, go back to here. Go back to the short from up here. Overnight, buyers came in. They pushed it higher. They pushed it higher. We had balance up here. Chop, chop, chop. Higher time frame. Get in position for something. We break below zero. Zero opens the door to this. Opens the door to settlement check. Buyers at settlement. Buyers above here. Open the door to here. They push it up at the at 7 o'clock. Come into this balance up here and sellers align with the sellers that came in here. That's interesting. Come underneath, come down, and we test VWAP level here of launch from somewhere. I'm going to say this is like 2 days back. 1 day back? I'm not sure what this is. A fractal of 1 day back. Unable to take it higher. Rejected the fractal from the zero. This is a short. Back to extend runs low. So you can sing this song. You can see where the market was long here and it rolled over here. And then we come into the short context, reject the fractal, reject the fractal of the fractal, reject the fractal of the fractal, reject the fractal of the fractal, create a new fractal when we didn't get back to it here, and continue lower. And then we have the grind, 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 and something's happened. Something's changed maybe here. And I say maybe. We're back to the contextual shift. Buyers above here open the door to return to 1, 2, 3. Buyers above here open the door to return to 0. But 1, 2, 3 is higher time frame. It's in the way of the intraday, which is the levels that we're trading right now. So if this edge holds here, then this edge here, that's our sandbox. And this is just a higher time frame balance in the middle of our sandbox. We're actually engaged against the people that traded in these VWAPs here. So 0-day fractal, the 0-day drop fractal, we can expect a rotation down. Contextually, still a short, but potentially we've changed context here. We've returned to this fractal. If we fail to check here, if buyers come in on a check here, that opens the door to higher prices. All of these things are things that you have to take a shot at because there's no guarantee with any of them. Like you could take the short from here and then go to 0, or you could take the long from the edge and go to the moon. But these are the areas that you're going to want to activate at. If you're going to activate at all, it's going to be at places that are logical price checks. Like what can you expect? And in hindsight, the best place to interact would be right here. Why? Because it's the safest. That makes me feel the best. I don't want to interact here. I don't want to interact here. I surely don't want to interact here. I want to wait for that edge check. And that edge check might not come until we push up here. And it still might not come. But the story is still alive, I'm still singing the song. And so if it doesn't come back to here, if we never make it back to here and I never get that price check, that doesn't mean I can't get involved, because this tells me there's a contextual shift. If willing buyers step in above here, I know there's fuel from here to here, and I can find a way to get in. And the same thing here, really. If we can't get below here, I know that if buyers step in above here, there's fuel from here to here. But this is counter trend. If we get above this, this is potentially in the trend. Like our trend has changed if we get above here for a move back to here. And then the potential to squeeze out any shorts from the session, and they will get wrecked at that point. So what you're paying for here, I think, is to see if the context has shifted. And so you can either get an early move, which is more risky, or you can be patient, which is risky in the sense that it may never come back to your edge. And there is certainly short opportunities in here, but it doesn't feel like a short to me, because if we were still on a short path, we would be putting holes in this edge, and since we're not, that makes me think, okay, well, maybe the trend is up. So now I want to see, do we violate this edge? I want to see that. If we can't get into here, then maybe the trend's changed. And I don't want to be the first guy shorting this back to here, because if the trend has changed, I'm on the wrong side already. So I want to see this get poked full of holes and then see the micro edge reject if I'm going to take the short. I would have wanted to see this get poked full of holes and then continuation short. That's not happening, so something might be changing. And it's all hard. It's you just have to stay on it. You have to stay on it, and there's a lot of levels that you're looking at, and you have to keep track of them and label them or not label them or mentally label them. So here we are, full mean reversion to the 1, 2, 3 stack. Potential to test that edge. Potential just to keep going. So if you were to look at this chart, the one that I'm streaming right now, can you see where the first long opportunity was? And can you see where the next opportunity is? Can you see where the first short opportunity was? Can you see where the second one was? And I think this is what you have to do, which is why I've called my every channel a hindsight channel, is I think you have to look back in hindsight in order to see it and see that enough to recognize the contextual changes. Yep, 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 but counter trend, right? So we're not taking that. Okay, here's our sellers. Look at that. Sellers stepping in hard on the rejection of the contextual drop. Now, they could be wrong, and I think they might be wrong, but we're going to find out down here. That's where this is where I want to look. So, we could certainly short that and certainly short developing back to here. That's a perfectly reasonable trade. But this move didn't just happen accidentally. It went up there for a reason. So if this is short covering here from the algos into the retail liquidity buying, and now it comes down to this lower edge and they have accumulated everything they need, the potential is to expand range from here, back to here, back to here, back to here. How about the short side? First short. First short, second short, third short, and fourth short, because there's lots of them in there. So we're either short the 1 day back, 2 day back, 3 day back stack and contextual drop back to the lower edge, or we're waiting for that lower edge to see what happens there. Uh, First short is pre-market. First short is right here on the rejection of this volume here. This is higher time frame rolling over, just like this is, just like this might be here. Uh, First short is at this edge here. Second short is at this edge at 828, rejecting the fractal. Next short is right here, rejecting the fractal of the fractal. Again here. The next short is right here at 901, the rejection of this rolling over here at the edge. And that's it for the short. So 1, 2, 3, 4, 5 short opportunities. If we were going to get long here, the long would have come above the drop from here back to 0 for continuation higher. That's the only long I can see. Short of this one, you could have taken this one back to the edge, but this absolutely changes things here, and this changes things here, and this, and this, and this. Back to that lower edge. Let's see what happens here. So rejection of the 1, 2, 3 stack. We got to see what happens at this edge. Delta is still hard down. So we have negative 6,000 delta on the day. Delta is down because retail is selling into somebody buying. If we can assume that the somebody buying is somebody that actually thinks this market's going to go up in a different time frame, so the micro sandbox 05 to 96 failed to check the lower edge, found buyers at the launch. Doesn't mean we're not coming down here, but note, if we take this out and find buyers above here and here, it opens the door to 1 day back. So all of this in hindsight, seeing this happen in hindsight offers us the opportunity to say, well, do I want to get long off of this? Or do I want to wait for this? Do I want to get short? Here, this is the logical place for it to reject because this is the halfway point from everyone in the session. So if they're selling this and selling this, then we've got more downside. If they're selling this but buying this, and the buyers here take out this and come back to here, I say 0-day back might be in the cards. And so then, with a clear understanding of the context, we should still be short contextually because the delta supports it, price action supports it, but we're at a level where the short has to get through the lower edge. And if it doesn't get through the lower edge, we're not going lower. If it gets through the lower edge, then low of day, micro composite, P low, P value area low, historical 2, we have downside targets. So look at what we have here. So even though this is the potential contextual shift, it's tied to this edge holding. If this edge doesn't hold and they keep selling it, this is just a continuation short. Delta supports it. Price action supports it. We have no reason to get long until this edge holds on a test here. And that's still a crapshoot because it might hold, come up to here, and then fold. We have no idea. So if I were short, I'd be looking for this edge here to hold price down. So if we get above 04, that might say all bets are off to the short side. If I were long, I'd be looking for this edge to hold. If we lose this edge, take out this swing, all bets are off to the long side. Right now, I would rather be short than long because delta supports it, because price action supports it. So a short from here, 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 looking to break through here with delta support, with price action support, makes good sense. But all trends end at some point, and this one could end here. This might be it. Oh, look, the lower edge is holding. Maybe we're going up. Oh, look, it's failing. Maybe we're going down. You know, like that's the price you pay to find out. And that's why you scale and take targets and don't skip them, because if your scale is if your long scale is back to here and we don't get above it, then chances are we come back here and you may be testing your entry location. Same thing here. If your short scale is here and we can't get below it, then you may be coming above here and testing your entry location. And what we're beyond the scale, like say you take 6, you take 3 off, and you have 3 left over. So your scale 1, 2, 3, that's where you make your money by trading for those higher time frame themes. If your scale is short, scale 1, 2, 3, that's where you make your money. The scale gets you in the game. The the targets keep you in the game. And that's why you don't skip them. And so you might even take 2 off at the first target and then hold 1 runner, or however you play it. But develop a consistent strategy for handling how you get in and out of trades. And don't move your stop, because when the thing fails, it fails. And I would say the argument for not moving your stop would be, if you're trading the higher time frame theme, you have to have a level that you're trading against, and then your stop goes below the higher time frame theme level. So assuming that we have a reason to get long here in a higher time frame theme, oh look, the micro composite. Well, where's the next higher time frame theme change? And when I look at this chart without looking at anything else, it's right here. It's where we have narrow VWAPs. And those make up the historical 2 edge. So if I'm taking along here, that's a swing trade, and the stop goes down here. So 38, so a 50-point stop, because that's the next check below. That's where this trade fails, is here. That's a swing idea, so think about buying this level here for this trade here doesn't fail technically until this check down here. As a day trader, you can't do that with leverage, but you can take the trade here and have it allow it to fail here. You can take the trade here and allow it to fail here. If it fails here and takes you out, then you get back in or you don't. Same thing here. If you take the trade here, it fails here. If you take it here, it fails here. If you can't put your stop here to here, this might not be the right trade. But once you have identified that location it fails at, then like if it fails and you move it and say, oh well, I'm going to go for this swing, or I'm going to go for this swing. Now you're trading a different time frame. And this time frame here has already failed. The edge was rejected, higher time frame, edge rejection, lower edge penetrated. It might work out, but you're still in a different time frame, and that's dangerous business. So you have to be willing to just take it on the chin. And I can fucking promise you that taking a stop here, let's say you get in at 900 and you have to give up 5 points on a couple of contracts or, six contracts or whatever it might be, it's way less painful than if you take them off here or here, or God forbid you start walking it back down to here. And that's also why you take targets, because this is the time frame we're trading in. We're trading from this time frame to this time frame. If you can't even get out of this box, you're not coming up here, and you're probably coming back to here. And so this is the scale location because this is where sellers are going to double down. This is the scale location because this is where buyers are going to double down. So if you're short from here and you can't get below here, we might be done for the day. You got to trade that time frame. And it's a hell of a lot less painful to take a stop here than it is to start walking it back up. And I think an unwillingness to take that stop at your entry location is probably more about wanting to be right. And I'm saying this from experience, wanting to be right and being a little bit lazy too. Um, I don't want to like I don't want to take a trade here and get stopped out and then take a trade here and get stopped out and then take a trade here and get stopped out and take a trade here and get stopped. I don't want to keep doing that, like because I'm lazy. And so in many respects, I want to trade this time frame here, but um my entry is from down here. And so if you're not sitting up here taking this trade right here, you're in this time frame. And if you're not taking it here, you're in this time frame. And if you're not taking it here, you're in this time frame. Me saying, well, I'm just going to put my stop above here because I actually think it's going to go down is just me being too lazy to like get engaged in the market. And I do it. I do it all the time. I'm not ashamed to admit it. Like I'll take a trade here and I'll put my stop down here. Why? Well, because if this thing fails, if if it fails to come back here, then it's opening the door to here. And so I'll take a chance. But that's lazy. That's just laziness. And it's losing sight of the bigger picture. And I'll justify it by saying, well, I'll just take one lot here and I'm holding for the upper edge. So my 1-to-1 is like a 1-to-4 and blah, blah, blah. And I have like lots of ways that I justify it. And I'm right a lot of the time, you know, at least to a certain extent. So we have some interesting price action happening here. We have this upper edge that formed up here, the higher time frame upper edge. We have this intermediate time frame edge of 4 days of balance at this higher time frame upper edge here, or historic time frame upper edge. So we're consolidating at the historic time frame upper edge and currently rejecting higher prices. So if we reject higher time frame upper edge, then the potential is to come back to here to find out if we're going up. and it's always going to be specific to the closest time frame. So the micro time frame, which I would define as '03 to '97, this micro sandbox, if it fails on this side and never comes back to this edge, we aren't going into any other time frame to the north. If it fails on this side and we don't come back to this edge, it's not going to any other time frame on the south. So we have to first trade the micro sandbox to get to the other sandboxes. And so to the north, we have the intermediate time frame sandbox and the developing upper edge developing sandbox. To the south, we have the historic time frame sandbox. So if we fall below this, we're actually in the historic time frame. The higher time frame is all above us. That's the price checks back to this upper edge. And since we're down at 19 days back, 20, 21, 22, 26, 28, 29, 30, all the way down to, probably 50 and 60 days back here, this is the historic time frame price ladder that we're seeing down below. And this is why, if you're long, you want to take a scale here. And falling out of this is an entirely different time frame. This is the historic time frame. It's not even the higher time frame. This is the historic time frame price ladder. So if we lose this edge, we just like jump timelines into a a really different timeline. Like there's no stops in here. There's nobody rocking a stop from 20 days ago. This is all everything below. The only stops are baked into this edge, and we're completely reliant on higher time frame participants below this edge. We have to be aligned with them. There's no fuel down here. If the higher time frame is selling it here, the only fuel is from here down to this, to the low of day and P low, and then we're in no man's land, free fall. So if the higher time frame isn't buying this up, if they're not looking for an opportunity to get long here, then retail's in control of this boat, and and probably with higher time frame support liquidating out of the market. Well, if but you're never gonna like realize that until you do it a couple times, and like really, like take those trades, go in sim and just take trades. Take trades and put your stop at the failure of the microstructure and never move it. And then when you get a micro, and I'm talking micro, like bookmap, chop chop chop, break high, retest, hold, get long, put your stop underneath there. And you might take 100 trades and have a 3 point or less stop on every one of them. Never move that stop ever, ever, ever. And then do the same thing where you move your stop to like ridiculous places like, take the trade here and move your stop to low of day, or walk your stop back as price comes back in your face, and then compare the 2 days, like how much downside you have. Don't even look at context, just do it like trade every trigger to the long side and put your stop in the wrong place, and every trigger to the short side and put your stop in the wrong place, and just see how wrecked you get. And then do it by taking every trigger to the long side with a 3 point stop and 3 point scale, and see how you do even out of context. You're going to do much better. You probably still lose because I think you have to have some kind of contextual edge. But like this right here was a long trigger. Chop, 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 break high, long. You took a stop at 94. Came back in. You could be walking this thing down. You can be like, oh, well, I'll just give it this or I'll give it that. And ultimately, this thing comes back in your face. So the most important thing is some kind of context. The short here, the scale here, target, 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 target. If you have two targets, you take the two. If you have three, you take the three. If you have 10, you can line them up. But if you're not 100% risk neutral, then you have none, because that's step one. So developing context, still down. Rejected this. Rejected developing. Taking out the lower edge. Looking to expand range. Targets down here. Micro composite. Low of day. Micro composite. Value very low. P low. If you were long and started walking your stop back here, got long here, said, oh, I'm going to give it here, had price come down, oh, I'm going to give it a couple more ticks, saw this, said, oh yeah, long, oh shit, it came back. I'm going to start walking it down. Like that's where you get wrecked. 'And I think it's okay to have a wider stop in a situation like this. So this doesn't fail until here. So we have this roll over here and this price check here. Maybe you get short here, 54. Oh, that's pretty wide actually. So I don't think I would buy a stop all the way up to here. But like that's where it fails. This here, there's no reason to move the stop anywhere else because if this fails, that's a contextual change. '97, return to balance, rejection, lower prices, acceptance, potential rotation up to '01. Fail to get here. There's an edge right in here. You can't see it because there's too many VWAPs, but if we fail to get above this micro edge, we're not coming to this edge. So if I were short from here, this would be the location I'd be looking to trail behind if I wasn't willing to leave it up here. And same thing here. If I'm short from here, I'm probably looking to trail behind here until we get a 10-point move or whatever you know, whatever I'm not okay with to the downside, then I'll jump down and get behind the something that I am okay with. So right now we have to get above 97, 96 in order to get to here. And we have '01 to 89, so about 12 points of MFE if we came to the full check here. And I have to be okay with giving back that 12 points to find out if we've got lower prices on. And if I'm not okay with that, then the next logical place is to down to 98. 98 to 89. Am I okay with that? That's 10 points. And if I'm not okay with that, then I'm probably above this little ripple right here. But it's important to note here that we have buyers that came into here. And these buyers are fuel underneath here. But if these buyers are right, and we get above these buyers in here at this edge, that opens the door to higher prices. As long as we stay below it, these buyers are wrong and they're fuel. And every time we sell down below a swing, we take the longs that came in here and we join in with the longs that move their stop from here up to here, and they become the fuel. And we'll just keep grinding them out. So the long side doesn't even have a hope until we get above here and then above here and then maybe, but the fact that we're exploring lower here is telling me that the longs aren't in the market yet. They were for this leg, and now they're not. And this is the current balance right here, and potential to rotate on both sides of that balance. So right now we're expanding range down. Where do we go? Previous point of control, low of day, micro composite, value array low, P low. What time was your long at, Ra? The one, look back here. You got long above 1 day back. Yeah, what time was it? What time was that long at 123 stack? Up here? So they're impulsing up to this edge. Gotta get above the 96 or potential downside. And we have some if sellers double down here and then up to '09, which I think is developing VPOC too. And if we can't get above this edge, then we'll squeeze back up to developing VWAP, test there, contextual, test there, 1 day back, full test there. But right now we're in alignment with the buyers from here to the north, and we're in alignment with the sellers from here to the south. 9:53 ET, so 10:53 my time or 8:53 my time. Did you did you see something in the price action that told you that there was a contextual shift at that level? Just open this up a little bit. This is not current price action. I scrolled back. We broke low from that consolidation and came back in range. Um, so 53 down here, we broke down here and came back in range. Okay, so when you look at this, what are your targets? Like say you got long at 53, exactly at 53, which is back over here. So your target from 53, your 53 long is to developing VWAP, right? And we have 5 points up to there. But this is even, we're gonna go down to 150 tick bar or 100 tick bar because I think it's important to look at this. So when I see this, I see price come down into here and it's basing out. And this is essentially my narrative for this entire structure. We come into balance. We test the previous balance and find buyers, sellers take over. We come back into balance. We expand range to the downside. There's a long right here, micro long right here. Back to balance, expand range to the upside, failed to connect with developing VWAP. I'm noting that. I'm like, oh, well, we didn't go to developing VWAP. We should have. Reject the edge, come back into balance, retest the upper edge, back into balance, and expand range to the downside. Buyers take it back into balance, expand range to the upside, again, fail to check developing VWAP. I'm noting that. Back into balance, expand range to the downside, reject balance, expand range to the downside further. I'm noting that. 853. This is your long opportunity. I see it, but where does it fail? Right here. If you're if you're ambitious, you can look for it to fail here. I don't see any reason to move a stop any lower than that. But I was, we had already failed to retest VWAP here, which had me kind of skeptical on the upside. And my narration, which is different than yours, I get it. Um, my narration uh, is that we came into balance, we checked balance, expanded range, came back into balance. Those two merged together. We expanded range. This is looking bullish again, but it's micro. And I want to see buyers here. Sellers here keeps it leaning south. Same deal here. Sellers here keeps leaning south. These two failed price checks, like to me that was a no-go zone for a long. And that's hard. That's hard to align with that. Uh, so I was looking at this and seeing this told me I didn't want to be long here because I want to be long on range expansion back to balance. So I want to be long here back to balance. I want to be long here back to balance. And if I don't have range, I don't have range, but that's where I want to get long. And I'm talking micro balance here. So a contextual shift, range expansion, long back to balance, hold for higher. And we didn't get the contextual shift on that check. Does that make sense? So I'm not sure how big of bars you're looking at, but my suspicion is they're probably not small enough, like for entries. Like these 100 tick bars are probably small enough. 150 tick, 200 tick bars, they're probably small enough. These are 0.75. Like for entry price action, I don't want more than like a 2 point bar, a $2 bar. I want to see what's going on. I want to see where the micro balance is. I want to be scaling back into it. And if I take a long here, it's going to scale here. And you just can't see that when you're looking at really big bars. So even here on this price breakdown, we have the sell-off, which is range expansion from balance down to here, range expansion on this micro. So we could be long here back to here, 3 points, break up, balance. Pretty tough to get long there. That's only a couple points if you can even get in. But that's how I'm going to play it. I'm going to look at much smaller and look at this price action here at the low when I put like say uh, 400 tick bar. I got it on 100, so we'll do a 300 tick bar. Just watch how that price action changes. Like you can't see anything here. Like that's really hard. That's really hard to read and get aligned with. So remember the the 0 day backdrop opens the door to 1, 1 opens the door to 0, and 0 opens the door to the squeeze. And it's easy enough to look at right now, and I'm not saying, I had the perfect read on this, but if I'm going to carry this forward um, and learn how to trade context in this way, I want to be looking at this every time it happens and trying to carry it forward for the next time that it happens. Note the delta on the rise here. put this in the back. Note the delta. Now why did... Note the delta on the rise here. We're still negative. There's our 0-day back, and now the squeeze potential is real if we find buyers above this edge. So micro lower edge down to here. Developing balance, potential to rotate on both sides of developing balance. 0-day back balance. We've already been down on 0-day back. Potential is to rotate on the other side of that balance. So we're trading micro balance, back to micro balance, back to developing balance, back to fractal balance, back to 1-day back balance as a suggestion because it's old and traded through, back to 0-day back balance where we have come back and now we have the potential to start a squeeze and expand range on the other side of 0-day back. So we've been below 0-day back and now we have the potential to go on the other side of it. And by virtue of being above 0-day back, we're also above 1-day back, which means we have the potential to rotate on the other side of that. So next price check up on the other side of the 1, 2, 3 stack here is what? The next price check up is the 6-day back. So we expanded range on the 1, 2, 3 up. We expanded range on the 1, 2, 3 down. We've returned to the 1, 2, 3 now. The potential then is to do what? Expand range further to the downside or expand range to the upside. So in the intermediate time frame check opens the door to a higher time frame check. But in order to do that, in order to accomplish that, we have to expand range down on the developing, return to balance in developing, return to balance on 0, and now we have to expand range on 0. Those have to happen before 6-day back can be anything more than a good idea. So that's how I'm aligning. That's how I'm aligning it. 2000 volume. So is that like a 2000 tick or I don't know what a volume bar is. I don't think I have those. I have range bars. I think to get into price action, see if you can build yourself a chart with a set of like 500 VWAPs or 700 VWAPs or 1,000 VWAPs, something that you can see micro edges on, and maybe you have that chart set up like, not that. Maybe you have that chart set up like this somewhere. That's just micro price action. And then you have your main chart with your 2000 volume set up like this. So you're watching this chart and looking for the edges that you might want to align with. And then your activation chart is the chart where you're looking for the break, the retest long, and scale back to here. Retest long and scale back to here. Retest long and scale back to here. I think your scales are maybe a little bit uh, more aggressive, which is forcing you to have an even more aggressive stop location. So above the zero kicks off a squeeze. It's dependent on higher time frame participants being engaged in the market. It's it's dependent on retail flipping over. So we want to see this delta continue to go up. This is counter trend, but you can see from the leg up, we're in the contextually in the trend from this leg up. If we add some VWAPs for the rest of the day, we're contextually in the trend from the low of day. So we're in trend here. We were out of context here, but then we came back into it and now we're in context with this low of day. Still out of context with the rest of the selling, but we're changing that as new sellers come into the market. And so we can see that here we're coming up to that upper edge right here at 21. So 0 day back is the generic line. The actual edge is at 21. If we find buyers above 21, that's where the squeeze starts. So generically it started at 0 day back. Technically it starts at 21. We have to see buyers above this edge. If sellers come in at this edge, it opens the door for a deeper rotation down. And so I only have 900 VWAPs in this Christmas set here. So I want to see that edge on the top side and the bottom side on this higher time frame chart. And then from there, I'm going to use my developing my my full session VWAPs as price checks above. So all I care about on this chart right here is the intermediate time frame. And that intermediate time frame is this edge to this edge. Developing time frame, developing lower edge, intermediate upper edge. And so I want to see, do we break out of this and keep going, or do we come back underneath this 0 day back fractal here, anchored here, and return to zero balance? And if we lose this, then back to 1, 2, 3 stack balance. And if we lose 1, 2, 3 stack balance, all the way down to developing lower edge. So I want to see the relationship between this move up and those different balances. Anything above zero opens the door to 6. If we sell back to 0, back to 1, then it opens the door back to this lower edge. And that doesn't mean that we're not going up to 6 today or tomorrow or next week. It just means that it might be off the table for now. What's the range? What's the true range of your 2000 tick bar or 2000 volume bar? Let's see if I can find one here. Volume profile. Oh, I know why I don't have a volume per bar. Okay, I can do 2000. You know, I don't know if I've ever done this. Oh, 2000 volume bar. Big. That's pretty big. It does make nice lines though. Nice and clean. Um, so the 2000 volume bar has a $2.75 true range. That's pretty big, considering your stop is 3 points, or what you're trying to accomplish for a stop. So, like you could take the trade inside of a 3000 or a 2000 volume bar. You could take that trade uh, and be on the wrong side of that bar and it could reach your stop. Okay, so you have a 6 to 8, so that's 2 bars. Okay, so this is what I would suggest. For, right now, this chart over here makes sense to be a 2000 volume bar. So let me just get a 2000. I'll set up a button later for this. If you like the volume bar, I'm happy to put that on. That doesn't that's not going to screw me up. And I actually like the way the bar prints. It looks nice, and that's kind of the criteria for me anymore. Is okay. So we'll go with a volume per bar of 2000. And how many VWAPs do you have on your chart? Like 0 to, and I think if with some practice you can get that stop less than 6 to 8 points, and it can be more contextual than. Okay, so you can see when we look at this chart, this is my higher time frame chart. This is it's the one that I have my 40 days worth of higher time frame VWAPs on. I typically use bigger bars so that the calculations aren't as frequent. Um, I don't want to see I don't want to see micro price action on this. I want to see the intermediate sandbox. And you can see how these VWAPs here and these VWAPs here, so the red and the green, come to a point here. That's showing that I have an edge here, and then I also have the edge here. So this is my higher time frame sandbox here, or my intermediate time frame sandbox right here, somewhere between developing and intermediate. It's not showing me any detail inside of the legs. It's showing me the upper edge and the lower edge. Then we have the higher time frame VWAPs that are part of if we break out of this sandbox, then we're in the price ladder. So we have the higher time frame price ladder over here. Why? Because we have the 1, 2, 3 here, and then the 4, and then the 5, and then the 6, and then the 7, 8, 9, all the way up to the upper edge. Okay, so this is the intermediate sandbox. This is the higher time frame price ladder. It is possible to have a higher time frame price ladder down here and up here. So maybe you have 4, 5, 6 down here, but you have 7, 8, 9 above. It just depends where the intermediate sandbox is opening in relation to that. So kind of keep that in mind. And uh, so the narration is this is the developing intermediate sandbox here. This is the higher time frame, and then below that is the historic. So we fell out of the higher time frame here at the 1, 2, 3 check, and we came into the historic, which are these gray VWAPs. We came back into the higher time frame price ladder, but inside of the intermediate sandbox. So we trade the intermediate sandbox first. If we break out of that, it's also a breakout of the 1, 2, 3 stack here. And then we'd be looking for 4, 5, 6, 7, 8. And you can see I skipped over 11 and 10 because they're out of order. Just like 1, 2, 3 is out of order. We're trading here back to 0. 1, 2, 3 is out of order in that context. So it's always to developing and then developing to 0 and then 0 to 1, 2, 3 below it. And if 0 holds to the upside, then it's the next one that's in order. So we have 0, 1, 2, 3, 4. 0, 1, 2, 3, 4, 5. It's always in order for potential. Not that you're going to get there, just potential. So the the 14-day VWAP or whatever this is right here is irrelevant. And a lot of times I just delete those off if they're out of order. I take them right off of the chart because they're not they're not the ones that I want to see. I'll note them, they're there, great. It's a balance that we're returning to, but it's if we can't get out of this balance, we're not going to the 4-day back check, which has also been traded through, but it's naked in the VWAP sense. So there's no VWAPs running through it from the intermediate. So it's a price ladder. 4 is next, and then 5, and then 6, which is a retest, and then 7, which is range expansion, and then we're in the higher time frame up to 8, 9, and 10. Okay, so this is what I would say would be let me make sure I'm on the right chart here. Yeah, this I thought I put it on 2000. So this is the one that I would say I would use the 2000 volume bars on this chart, and I would be willing to change this from 2000 volume bars to whatever it took to keep this edge wet. So I want to see this edge always as an edge, not as an open-ended trailing set of VWAPs. So that's what I want to see on this chart. And I don't know why it's not switching. Let me change the days. So we'll go to like 11 days. I think I think I actually might need the volume package to, and I don't have the volume package to use volume bars because it's not allowing me to switch. I don't know why it's not allowing me to switch. But that's how I would use it if you're going to use volume bars. I would use it just like that. And then on this chart, which you're saying is your execution chart, and you have 300 VWAPs, does that 300 bars, or are they spaced at 1, or are they spaced at 5? Like, what is your spacing? How many bars does it span total? That's my question for you. Oh, okay. I finally got it back. So I wouldn't even use 2000 volume on this chart. I would I would keep this edge wet up here, um, and that's gonna be a different volume. So maybe 1400, whatever it took to make that intermediate sandbox. So not 14, even down to 1200. So I I only want to see what I need to see. Okay, so 1200 gets my edge right here. That's pretty close. So I'd probably be rocking about 1200 today. It's going to change tomorrow and it's going to change next week. Okay, you're spaced one bar at a time for 374 bars. Fair enough. So let me see. And those don't matter. Here's my here's my set of one. So this is a lot of bars every one. Uh, so 2000 volume. Does your do you see how you can't see any, there's no texture in here? They're just really clean VWAPs. Aside from the ropes, you can see a nice rope here and you can see the developing lower edge here and you can see a consolidation here. So this is really clean, but there's no, these bars are so clean. They're hard to see. You can see consolidations pretty well though. But old consolidations fade. See how this just fades into nothing here? It's, you can see it over here, but now it's just volume. So I like to have a little texture so you can see those price checks. So Renko's are really good at it. You can see the impulse here and the recheck here. Impulse here, recheck here. Impulse here, recheck here. But these are hard for me to look at. I'll get dizzy looking at them. So I don't like them. What I've found is uh, range bars are okay and they're nice because you can just like define the range, but even those are a little wobbly. I I like these tick bars. And you can see with the the one tick bars, they're hard to see the texture. They're hard to see the consolidations fade really fast out of them. So I can see why you would want to go with a bigger bar. Let me just drop the volume over here. So here's your 2000 volume. And you can see the volume when you scrunch it up a little bit. You can see the impulses, but you see how you kind of lose that texture. You can't see it as clearly. These are really pretty, but I'm not sure they're my favorite. Like I don't see much more usefulness in this than I do over here. Now, maybe we go down to a lot less volume, so maybe like 500 volume on this. Because what we're looking for, and that might be what we're looking for in this chart is something we can execute off of. And so we want to we want to be able to see the just the developing sandbox. So you see over here, 0 day back here aligns with this, and this aligns with our lower edge. So this is our intermediate upper edge. This is our developing upper edge, our UE. So this sandbox with this, we have a wet edge down here and we have a wet edge up here, and it's showing a 10-point range from one edge to the other. So this is the kind of chart that I want to activate off of. If I'm getting short here, I want to target here. If I'm getting long here, I want to target here. And then I want to see some price action in here that gives me something to shoot for. So in this context, let's just talk about a long here. We got developing lower edge at the micro lower edge, which is created on these colored VWAPs. Need to get above the drop off of 0 to get back to 0. So if we were going to take a long here, it would be a long at developing in conjunction with this lower edge holding, scale here, target here, punt above. And that's how I would trade off of this chart. But you can see it's really hard to see. It's really hard to see the consolidations. Now if I go to a different set of VWAPs and so I have the 500 volume, and now let's go to, what's the range of this? $1.50. Let's go for like a 200 volume bar with 5 spacing. Yeah, this is a dollar range. It gives us the upper edge, but it doesn't give us the lower edge. So we don't have the entire sandbox, developing sandbox even. I have to actually use 900 VWAPs to get the micro edge, and I don't have any texture. I don't know. Not my favorite VWAPs, or not my favorite bar style. Have you tried? Um, oh, you have a 500, uh, you have a 500 VWAP set every 5 bars? Every 1 bar for 500. Okay, so here's the trade-off. The VWAPs are going to show you edges, and it doesn't matter if you have 1,000 VWAPs spaced at 1 bar or uh, or 200 VWAPs spaced at 5 bar. They are going to show you the exact same thing. The difference is then going to be what you can do with your candles. And so I want to see candlestick price action inside of the sandbox. So what I tend to do is use a little wider spaced VWAP so that I can still see the edges and still see the ropes, but do that inside of uh, with with bars that actually show me price action. Excuse me. And so if this is our intermediate sandbox down to here, this is our micro sandbox here. It's kind of hard to see it on this chart. It goes from here to here, and I'm over on the right chart. It goes from here to here. If I'm getting activated, this is my upside target. So I want to see that clearly, and I want to see that over on this left chart. And so I think a 500 VWAP or every 5 bars is a good medley, but you can see like it's really hard to see that on this 200 volume chart. And so I have, this is a $1 range. I can just go to a $1 range chart and it's going to get me close. You can see, I can see the texture a little better. I can see that there's a rope right here. Test, rejection, range expansion on this rope right here. So you can start to see it on this range chart. If I go to my favorite chart, you can see I have, this is too big because I'm seeing the sandbox way up here, so I can actually go with a smaller bar here. So for the same number of VWAPs and the same number of bars, I can drop down to a smaller time frame, and then I might. So now we're back to this intermediate lower edge. If we lose that, we're going lower. So we weren't able to hold the 0, back to 1, back to D, back to the lower edge. Buyers have to step in here and keep it inside the sandbox, or we can range lower. Okay, so back to what I was saying. I'm looking for some texture here, and I'm looking for a balance between seeing the last leg here, which I'm even losing that last leg because I have all these VWAPs crossing up, and they're obscuring this. This is the, if I'm getting long here, I'm trading back to this edge here. So all I need to see is this edge. So with a 125 tick bar, I either have too many VWAPs or too big of a bar. And you don't get much smaller than that. But you see how when I get rid of that, and maybe you can't see it here. Hold on, let me get some better VWAPs. I'll use white ones. You can see that if I'm getting long here, I have to scale in front of this micro edge here. If I'm if I'm getting long here, I scale here, then target at the drop, target at the edge, back to the UE for breakout. If I'm getting short here, failure of the edge, short here, continuation of the drop, continuation of this rope, short here at this rope, short here at this rope. Those are all continuations, and they're like 2-tick continuations. They're not things that you can align with, um, but you can see the price action. And this is the same price action that we saw on this right here during the RTH. But I can't see any of that price action on this chart. This volume bar is not my favorite. So if you're having a hard time seeing consolidations, if they're disappearing, if they're not carrying through, it may very well be that you just have too much detail and your bars are just printing too clean. So 700, and I just want to see the last leg. I don't care about anything else. I just want to see the last leg of price action from this edge up here. I don't want to see all of this crisscrossing up. So I'm going to use progressively smaller bars until I lose all of that, but keep the resolution of that edge. And the reason I'm doing this is because I want to show you that when you get rid of what you don't need, you can actually see what's relevant. So we're on a 200 tick bar. We're going to go down to a 175. And now for interacting in this downtrend, we can see the short here, the failure to retest here, the failure at developing VWAP here, the failure to retest here, the failure to retest here, the failure to retest here. We can see all of the ropes carrying through here, 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 developing. We lost our VWAPs, but those aren't as relevant as to this leg at all. So you can see how when you have what you need to see, you can see the details. If we bump this up to a 175, from a 175 tick bar, up to, let's say we'll go 500. If we're rigid and we just say, well, I use a 500 tick bar chart. Actually, we're going to go higher than that because it's not making my point. I used an 800 tick bar chart. Do you see how you lose the levels in here? They get they get kind of mushed out by the price action here. You can still see them where they're clean, but you can't see them up in here. And and we're not trading against these levels anymore here. We're trading against the levels that are coming down from here. So you want to keep that edge nice and clean. So you want to see the edge where you're activated, and then you want to see the trend. And then when we get to the bottom, we want to see the edge and we want to see the trend. But we don't want a bunch of, we don't want this. Like if we're trading, this leg here isn't trading against any of these green VWAPs. They're trading against the red ones. So all we want to see on the upside are red to the edge. And so even trading this long from back here back to here, all we want to see is up to that edge. And that means you have in order to do it correctly, you have to constantly change your time frame around. And so 8 tick bar becomes a 300 tick bar. Okay, and we lost our edge. See, our edge is up here. So 300 tick bar, we ran out of VWAPs. So we want to see that edge. If we were only trading back to here, this works fine. It's showing us the edge. But if we have a higher edge, we want to see that nice and clean without any of the buying VWAPs. We just want to see the selling VWAPs. That's who we're trading against on the long side here. And that's the nice thing about having these two colored VWAPs. They're a pain in the ass. I don't like the Christmas VWAPs, but they're excellent for illustrating the different participants because you can see these are buyers and these are sellers. So we're almost to a wet edge here. Not quite. We ran out of VWAP still. So we're at 450. Maybe we have to go up to 550. And there. Now you can see we have a wet edge. Our green have run out. So if I were taking trades up to here and narrating just from this without manualing anything in, I'm looking at the VWAPs that are tight here, resistance, the VWAPs that are tight here, resistance, and at the upper edge, resistance. And same thing down here, lower edge, resistance, or support, however you define it. But this is just going to be too much. So rather than looking at all of this on this chart, because if I'm taking this short here, I don't want to see all of this back here. I only want to see what's inside of this leg right here. I want that to be naked. And I want to trade back to this edge. So all I need to know is where is this edge and what is here. And you can see that I have no texture at this time frame with 500 tick bars. So what I've found is I want the smallest bar that my computer can print with the minimal set of VWAPs that my computer can deal with. I don't want to see a bunch of extra stuff. So if I'm taking a short against the buyers in this leg here, I don't want to see the VWAPs from the sellers that are coming from yesterday or the day before crisscrossing through here. I want to see these edges here. I want to see these edges from here. I want to see these edges from here because these are the people that I'm trading against, the people that are green here. So if I'm selling it, I want to trade against them. And then on the flip side, retracing to the red, 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 retracing to the red until we run out, and now we're starting to go green again. And so if I'm long, it's retracing to the green and trading against the folks in red. And so that's what we're seeing, and it's really it comes down to first of all starting with uh, a bar size that you can activate on. If you have a 6 point stop, you can't activate on a 20 point bar, and that's the bottom line. If you have a 3 tick stop, you can't activate on a 3 point bar. And so I think if you have a 6 point stop, you want to see the price action inside of a 6 point bar. You don't want to like have a 6 point bar as your starting point. And you probably don't want a 3 point bar. You probably don't want a 2 point bar. You probably want to see the detail of what's happening inside of that bar. And that's hard because people get caught up in the minutia, in the micro time frame. So I would offer this, and I think I've maybe mentioned this a few times in the past, um, but I would offer this. What you're looking at when you look at price action in any sandbox, what we're looking at here, let me get a drawing tool. Just let me know if you're with me before I start drawing things out. So what we have here are candlesticks, and the candlestick goes from here to here. And when we break above that candlestick, think of that as the wick. And these are time frame. Okay, uh, these are time frame independent. So they don't have they don't have a time frame. Okay, but we have the body of the candle and the wick. So the orange box is the body. This is the wick. When it breaks above that lower edge, that upper edge, it creates a wick and it comes back inside, creates the body. Breaks below it, and I'm just going from this edge to this edge. Breaks below it, this is wick, this is a new candle. And so these are the candles. We can have 100 tick bars and we could break these things up into a 5 tick bar and have more VWAPs and we'd see the same edges and the same breakdowns. We're just breaking these micro price actions into smaller pieces. And so you're looking at a 2000 tick candle, and that 2000 or 2000 volume candle, that might be all of this price action in here, but you're not seeing the breakdown, the breakup, and coming back and making the body and then the wick, and then coming back inside the body, and then rejecting the body. So you're not seeing that price action inside of here. You're seeing one bar to here, another bar to here, and another bar to here. So you're dividing that that 2000 tick candle is there's like maybe two of them inside of what I'm seeing in here. Maybe there's three of them or whatever. You kind of get the point. So use the VWAPs as your sandbox. Use the VWAPs as candles. So think of the the lower edge of the sandbox as the bottom of a candle and the upper edge of a sandbox as the top of a candle. And so the way that you can do that is to have a, a set of VWAPs that continually monitor it. So here we have price came in and we created a wick on the developing day. We just wicked down on the developing lower edge and then we came back inside of it and now we're at the upper side of that sandbox. Now we can create a wick on this. If this is the candle here, up to here, now we have the potential to create a wick above the body. And if we can't sustain that wick and come back into the body, it opens up the potential to return to the lower side of the body. So our candle in this situation right here, and it takes a little bit of rethinking, our candle is here. Body, wick, wick. And this is just a potential wick at this point. Wherever that wick stops and comes back into the body is the end of the wick. So maybe that wick looks more like this right now. Come back into the body, reject higher prices, potential to rotate to the lower side of the body. And this body is dynamic too. Oop, this body is dynamic too in that it is coming up to here, to this edge. So what I'm suggesting to you is when we're down here, this wick down on the developing lower edge was important. It's less important because we're not going to carry a stop down here anymore. We're going to trail it up in some meaningful way. To me, I'm going to look for this body to hold. If the body holds, potential to wick down. And so we have another candle in a different time frame that's forming right here that's independent of the developing lower edge. This candle, this wick, this price action, that wick down here is in relationship to this body that's moving from here and here, and it's still moving. So this this lower edge continues to rise up, and when this wick fails here, it opens up the potential to return to here and then wick down on this side. And it can be a big wick or it can be a small wick. So our potential, if we stay out of the body, is to come up and recheck here. And then we have the same thing happen over here. We have a wick above 0-day back here. We have a body from here down to the developing lower edge. We have a wick underneath the developing lower edge here. Wick, body, wick. Wick, body, wick. And so it's just a different way of looking at candles. And so inside of this candle's time frame, we're seeing the price action that made that candle. Inside of this candle's price range, we're seeing the price action that made that candle. And so when you like learn to look at the candles, the sandbox actually being a candle, the range expansion on those edges as being a wick, you can look at smaller time frames and not get the tunnel vision that so many people get when they look at a micro chart. Because you see this right here and this move right here might be in the context of the highest the biggest bull run you've ever seen. And if all you're looking at, if this is your chart and this is all you see, you're like, oh man, this is so bearish. This market is so bearish, and you get tunnel vision. But you're not looking at the sandboxes. You're looking at one leg of price action. And so all of this is taking place, and we could do the same thing here. There's a wick here above developing, there's a body here, and there's a wick down here. We could do the same thing here. We could do the same thing all the way back. So learn to look at those sandboxes as though they're the counter. Oh, 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 did I lose YouTube? It says it's not responding. Um, learn to look at those the sandboxes as if they're just a candlestick in an unidentified time frame, and see if you can uh, increasingly lower the the candle or the size of the candle so that you're seeing more price action inside those sandboxes, because that's how you're going to lower your stop. You're going to go from a 6 point stop into a 3 point stop. That's how you're going to be able to say, this is where this fails, and if it fails below this, I'm going to have a 1.5 point stop instead of a 3 point stop. So you're going to give back a lot less. You're going to get better entries. There's a lot of benefits to it. So do go back and have a look at this. I think it's kind of an important concept, and you can describe the context and the candles and the time frames any way you want. But what's important to me is the edges create what is the important time frame. Uh, so that developing time frame is a big candle. It's a big candle. As a 3 point stop trader, I can't just take a stop in the middle of that candle. I have to try and take it at the bottom. And so I have to break that candle up in some meaningful way so that I can align with it. All right. So I think that's an important concept to kind of master. So think of if you think of the 1 day back to the 0 day back as a time frame. Anything that extends below the 0-day back is a wick on that time frame. Anything that extends above the 0-day back is a wick on that time frame. And that's at pretty much at the when there's some range in between the two. And once we come below 0 and come to 1, now the upper edge is morphing into a different time frame. Um, we can wick down below here, but then we come back up to it, and that's one candle, and that's one relevant time frame. And then inside of that, there's smaller time frames, and so we're just trying to align with them. And so if you can keep uh, for me, like you could go infinitely lower and lower and lower and create more and more sandboxes. And so a good example is right here. We have a wick below this edge. We push up. We create an edge. Here's a lower edge here that we hold. We wick above. We come back to it. We wick down below this edge. And now we're wicking back above. We're wicking below this edge. And so that's just a series of really small candles inside of that move up. And that's all we're doing is dividing each time we wick down and then go higher, we left that wick behind at the body, and then we expand the wick on the upside. And so which side are we wicking up on is what's going to determine the direction of the trend. So all of these edges wick above, wick above. And like to really illustrate that, get rid of all the retracements and just think about it like this. I'm going to draw some wicks here. We wick above. We wick above. The height of the wicks aren't relevant, but we wick above. We wick above. We wick above. So you can see, in a trend up, we go up, we pull back, we break the upper edge, and expand range. We pull back, we break the upper edge, and we expand range. We pull back, we break the upper edge, and expand range. We pull back, we break the upper edge, and expand range. It's the exact opposite in a downtrend. And it's easiest to see if you don't have the extra ropes in, but we go down, we break the lower edge, and we expand range. Lower edge here, expand range. We go up, break the lower edge, and expand range. Go up, break the lower edge, and expand range. So it's the exact opposite. I think it's easier to see right here because it's black, the background, where this is, it's got too many VWAPs. But that's what's happening. You can see it here. This is a good example of a downtrend. Break the lower edge, expand range. Break the lower edge. Here, just I'll drop some. Break the lower edge, expand range. 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 So you can see how it looks when it's clean. It's hard to see the same thing over here in this uptrend. And a trend can be 5 minutes, 5 seconds, or all day. Oh, I have all these shapes that are, I don't want to delete all of them though. Those are the shapes I want to keep. So in the developing context, excuse me, look at the developing day. So we have price has come down, found a low, broke up, returned to the 1, 2, 3 stack, to the developing lower edge, expanded range on the developing lower edge, found buyers, made a series of higher highs, taking out the 0-day back, came back into the sandbox, expanded range on the downside, now at the 0, that was range expansion on 0, potential range expansion here. So if this is our lower edge and this is our higher edge, which way are we trending right now? We've made a down move, yes, but we're making higher lows and higher highs. So to keep this uptrend alive from the low of day, we theoretically need to make a high above 924 before we make a low below here. So we already have a high here. We don't make a new low until we come below here. That would keep this uptrend alive from the bottom. Now from the top, we're in an inside bar on the day. So big selling all the way down, and now we're stuck in the middle. So in order to trade against these folks here, we need to see buyers above this upper edge. If we have buyers above here, then we can squeeze out. No buyers, and we probably stay inside of here, or get sellers below here and expand range to the downside and change this trend up. So this could be, from a higher time frame perspective, a bear flag. Sellers unable to take it higher in a consolidation and flush the toilet. Contextually, what do we look like here? Contextually, delta is still negative 6,000 compared to yesterday's, so not looking good. Still leaning to the short side, I think, but buyers trying to organize. And I think in this situation, you can play it either way. You could be long here, range expansion, return to balance, range expansion, return to balance, range expansion, return to balance, range expansion, return to balance. Potentially. Chew on that. We'll kind of leave this here so it doesn't get too long so you can review it and you don't need to review it at 6x speed. I'll be right back. had to let the kitten out. He's been doing really great. He was in last night. Um, he went out at like midnight, came back at 1 and stayed in until now, basically. You're welcome, sir. So it's pretty, right now it's pretty balancy, but with an upside tinge. So the potential the potential is to lose this lower edge, and that would change everything. But like right now, it's grinding up. Um, Still uh, short biased on the day. Delta is hard, hard to the sell side, 63. They're selling at 3 to 1 in the ES and accumulating at 1.6 to 1 in the NQ. But Delta is definitely leaning south, which means retail is selling into somebody. As long as this lower edge holds, I would say we have the potential to go in and try and put in a new high. But like I was saying, this is broken. We have a higher low here and a higher low here. We have a higher high and a higher high here. If we take this out before we take this out, then that uptrend is broken. But right now we're in a bit of an uptrend, grinding higher in the context of a downtrend on the day. But the real potential here is if we can find buyers above the 0-day back, we can see a good squeeze out the top. Now we're accumulating buyers in here. Uh, it is retail is selling it, so the buyers that we have in here is not retail. This is higher time frame participants maybe accumulating a position or at least unloading a short position, but this is resting liquidity here uh, that's buying this up. This is not retail is not buying this. Retail is selling the crap out of it. Now that resting liquidity could be in the form of limit orders for covering shorts, but delta is definitely negative, and the potential to squeeze is at these edges. So here and here. And if we don't squeeze out, then the potential is to come back and test the other side. And we're doing all of this around the 1, 2, 3 stack. So this is all taking place around this balance here. And now it's the 0, 1, 2, 3 stack. In fact, it's the developing 0, 1, 2, 3 stack. So all of this, and this is 3 days here. So today, yesterday, Monday, and Friday. All of this is happening at balance, rotating around here. We expanded range south yesterday. We extended range north in the ETH, and now we're trading inside of this selling leg here. Inside of here. Squeeze potential above here on developing shorts. Long liquidation potential here on developing buyers. And the sandbox is from 0 to this lower edge here. And so in Christmas land, you can see our developing sandbox, micro sandbox is really thick in here. I don't even have enough VWAPs at 900 to get outside, even at 1,000. There's so much volume trading in here inside of the developing sandbox. It's really tight. So I'm going to actually have to up my bar size to accommodate for a lack of, so I can't even get the developing sandbox on a 250 um, tick bar. So let's try 400, and even 400 leaves me short of the developing sandbox. So if we come over here and just drop those on the 600, that's our developing sandbox right there. Developing upper edge here, developing lower edge here, price inside of that. Just need to turn these on and off again so they go back on top. So that's our developing sandbox, and then our micro sandbox will come down to a 100 tick bar, and that's a 0.75 range. Oh, it's a dollar range now, so it's a pretty small bar. And then this is just going to frame up our most micro sandbox. So if I want to get a line to one side or the other, it's going to be a trade from this edge to this edge, or from this edge to that edge. And that's not much, 06 to 10, so it's 4 points. But I know where the sellers are going to come in. They came in here, they might come in again. If they don't, opens the door to retest the 1, 2, 3, range expand to the 0, yada yada yada. So this way I can pick a side. Which side do I want to be on? So right now, in a developing session, we have sellers at the developing upper edge in alignment with delta. And this is session delta. This isn't delta of this leg. This is just general delta in relation to yesterday's delta. We are more short today than we were yesterday. So we have sellers at the upper edge in alignment with delta. So in like from just a pure delta and price action perspective, a short from this edge is contextual. We're short delta wise on the day. This is a doubling down of delta and opens the door back to here. Counter trend wise, on the day, we have long opportunities off of this edge, but that's counter trend on the day. It might be aligned to the higher time frame, but it's not aligned to the current time frame. So what we need to see to have full alignment to the upside is we need to see all of these candles green, and that'll come when the delta on the day is positive in relationship to yesterday's delta. And we need to see, second here, we need to see price above the 0-day back VWAP, which is the session's VWAP. That would be, so green candles above here would be contextually aligned to the long side. Now, those candles aren't going to get green until price gets above here. So one kind of follows the other, and at that point you're looking backwards in time, and it's important to recognize that doesn't, that just tells what happened. It doesn't tell what is happening. What is happening right now is people are selling it. Hence we have delta, but people could start buying this right now. The buy switch could have flipped down here when our delta was at negative 7,500. They could have started buying it here, and this could be the one that takes us up to all-time highs right off of this level here, off of red delta. So it's not telling what's happening, it's just telling what has happened. But the theme today is below the average price, sellers in the market. Below the average price on the session, 0-day back on the session, below the average price, sellers in the market. Now somebody's buying the other side of this. If it's higher time frame players, they're looking for retail to sell it down into it. They're happy to catch it down below somewhere to take this thing higher. It's not going to show up as positive delta. It's going to show up as negative delta because retail's selling into it. So we don't know these things. All we know is that if retail's selling it and they're winning the price war, that's the side we might want to be on. At some point, retail's done, the higher time frame's done, and then this thing's free to move about the cockpit. But right now, there's, aside from the buyers that came in here, there's no reason to think that this thing's going to the moon. We can't get above this upper edge. We're stuck in this sandbox. So zero isn't even the upper edge anymore. It's just the first sign of life. We need to get above here and have green delta in order for a context change to have occurred. And once it occurs, it could very well come back and turn negative on the day again too. So they're all good things to be aware of, but like I don't think we can trade based on the color of the bars or based on, where we are. We have to trade in a smaller context. So if you're going long from here, long above here, long above here, long above here, long above here, up, came back in, short below here, short below here, short below here, short below here, short below here. Oh, buyers came in and screwed that up. So we have to align with whatever theme we're trading and then have some downside and upside targets that we can take position off at, because the reality is you could get, if like say you took this long here thinking, okay, well, that's the long that's going to here, what are the chances that this gives us this, even though this is my ultimate destination, is this upper edge. I don't know if this is the one that's going to print that. So if we can't get out of the sandbox, it definitely isn't the one. And what are the chances of this one going down to here? I don't know. If we can't get out of the lower edge, we're not coming to here. So that's step one, which means if I'm taking a short from here, everything after this is a crapshoot. If I'm taking a long from here, everything after this is a crapshoot. And maybe after this. And maybe after this. And so I have to have reasonable expectations about where this thing's going to go because it could sit in here for the next 2 months. And this is why we give back so much to the market because we have unreasonable expectations about where it's going to go from where we enter. Guilty as charged. I do it all the time. Buyers above this edge open the door to here, here, and here. And it opens the door. Whether it walks through it or not is an entirely different battle. Just looking to keep that edge wet. So this price action that we're seeing, these VWAPs in here between 510 and a quarter and 7 is the same that we're seeing here. We're just seeing it in a little more detail. So if this edge fails, it puts developing on. If developing fails, it puts this rope on. If this rope fails, it puts this rope. This rope is the lower edge. So we're just seeing everything over on the right chart. We're seeing in more detail on this chart. But the VWAPs are set up in a way that is just showing me the current leg from here to here. If I can't get out of this, I can't get to anything else. So I want to, this, if I'm going to activate, it's going to be in this micro edge back to here for continuation, here, 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 and everything after that is punt. And I would say everything after this developing lower edge is a punt. Hell, everything after here is a punt. Like you just don't know. And it might be a good reason not to do anything inside here. Maybe the trade was from here. Maybe the trade was from here. Those two locations make the most sense in anything on this chart aside from this. So if, and I took a long down here, but I had reasonable expectations and took it off somewhere. I think 1 day back failure. No, I actually took it at the 0 day back check was when I got out. So I didn't take it on a stop. And this is a worthwhile short, but I didn't take that. I was yapping, and now we're in the middle. So if you're not long from here and scaled into here, or you're not short from here and scaled into here, there's really nothing to do. Or long from here, or short from up here. But it's all contingent on being scaled. And in this current price action from the short here and the long back to here, if we lose this edge, it opens the door to this edge. If we lose this edge, it opens the door to this edge. And then it's a matter of applying your understanding of whatever higher time frame context you think is most relevant. And so this is why I say, repeatedly say, You can make money trading both sides of the market, even if you're wrong. You just have to know where the edge is, where the scale is, and what the reasonable expectations are. But current context is pretty ugly down. Could change. Maybe it's already changed. No idea. But I know on the day sellers have been pretty active. But there's also somebody taking the other side of that selling. Sellers here, sellers here, sellers here. Look at where the wicks are on the structure. We have wicks here and no wicks here. So in this current structure, I would say the weight is to the downside. Price exploration is happening underneath this edge here. But this is the edge that matters right here. If we lose this edge, then it opens the door to a deeper pullback. Opens the door. Whether they walk through it or not is a different story. But that's what I'm looking at. I'm looking at which side is exploring price and which side is accepting it. And right now, I would say the side that's accepting price is this side. They're saying, "Oh, well, we're not going higher." And this side is exploring price. That's a pretty shining example right there of a developing VPOC to VWAP. So VPOC to VWAP is typically not like what people trade. They trade the mean reversion trade, but that bounce off of that VPOC, which is I think right here, 899, is at this lower edge. So as when buyers came in and came back inside the lower edge, that opened the door to return to developing VWAP. And if this edge gets bought up and we get above developing, then potential is to come back to the 6 3/4. And above the drop, potential to the edge. And above the edge, potential to 0. And above 0, and so on. Actually, 1, 2, 3 stack. Now developing back to VPOC for the Tom B trade of the day. But I would say I would be less inclined to take this because of where we're at. We're at the lower edge of the developing sandbox. So a short at developing VWAP in looking for a developing VPOC is a short into an area where I would expect buyers to step in. And there's our 0. And then we have the edge at 8 3/4. And then if we can get out of this micro edge here, it opens the door to a 1-day back, 2-day back check. The 1, 2, 3 stack, we're already above developing balance. Above here, full session balance. But still in a bearish posture. Below the developing upper edge, hard red delta, sellers, question mark, buyers above here, squeeze higher. Sellers step in like they did here, here, here. There's your scale. Resistance, 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 failure, potential lower. Long here. Target, target, target. Break out of this edge. Target, target, target. Pick a side. So context of the day is short below the upper edge, sellers below the micro edge, sellers, delta hard sell, but when the context changes, whether it's delta changing or getting above key levels with the potential to squeeze, that's when the best moves happen. So right now, the sellers on the day are on the hook If we get above that developing upper edge, that's when the squeeze starts. Now we're up there and they doubled down, and we were up there here and they sold it down again. So it might be when the best moves happen, but it's not happening just yet. So we need some audience participation here. 1, 2, 3 stack check. And buyers above the 1, 2, 3 put a full return to 0 day back, where we get to find out, is this the rotation that goes higher, or do they sell it down again and it becomes the rotation that goes lower? So we broke out of this micro edge here, expanded range, think wick, broke down from this lower edge here, think wick, the body of the candle is here. If we come under here, it opens the door to return to here and create another wick, or accept the body and stay inside and look to expand range on the other side. Micro lower edge. Short from here. Gotta get through here. Long from here. Has to hold up this micro edge. Or potential to here, here, here. Not my favorite place to engage, and a painful place to try and hold through. I don't care which side you're on. It's uh, it's brutal both ways. If you have, especially if you're entering inside, like a short here, or if you're taking along from here. But we have price support for the short side. We have delta support for the short side. Uh, until one or the other of those breaks, I think it's kind of clear which side you might want to be on. And I have no idea. So back to that lower edge, and we need to see active selling below this lower edge for a continuation south. If they continue to buy it up, it keeps it inside of that sandbox. Hi, buddy. Is it cold out there? Come on in, muddy feet. Hey, you got muddy feet. You got muddy feet. Come here. You're okay. You're okay. Hey, 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 hey. It's okay. There you go. Get up there. That's a good boy. Yeah. Yeah. That's a good boy. Okay. Yeah. Nice conversation with the cat. All right. So the bottom falls out. If we get below, and buyers take it back up and keep it inside the sandbox. Yeah, that's Murder Minutes. He just went out, I don't know, like an hour ago, but we got like a little bit of snow here, so he's this first snow of the year. So we got range expansion on the swing, range expansion on the developing VPOC, and we're falling out of the lower edge here. So looks like the downside is looking still pretty solid. Now, case the current trajectory has not changed. We have a low and a higher low. We have a high and a higher high. We have a higher low. This higher low does not get negated until price comes down to 89 without going above here. So we're just stuck in the middle, but definitely looking more still. I mean, like just looking at the selling that's taking place and looking at the delta, I definitely feel like the downside is the side that Makes more sense to be aligned with. Maybe. Funny. Some more sellers here. And now the 895 creates a potential change in context here. Uh, so we had what looked like a higher high and a higher low and a higher high, and now it's a lower high on the high of day, or on this swing here, not the high of day, but on that swing, and now a lower low here. So definitely looks like things may have kind of realigned to the south. Delta is still hard down. Price hard down. Upper edge selling. 1 day back selling. We now have 7,000 delta, almost almost 7,000 delta to the negative on the day in relation to the delta from yesterday. So 7,000 more negative delta than yesterday. So back to developing VWAP at the micro upper edge, intraday edge. We have a micro edge at 907 before the full 1, 2, 3 stack and 0 above. And it's kind of getting to be the 0, 1, 2, 3 stack, but so sellers at developing would be a rejection of balance for a retest of the lower edge. Buyers would be an acceptance of balance for a retest of the 1, 2, 3 stack. Well, how have you done? Did you right the ship after this morning? Have you done anything more? buyers above this micro edge. The last time we were back at the HUE or the developing upper edge here, here, buyers above this edge, open the door to the 1, 2, 3 stack. Above the 1, 2, 3, the 0, and above the 3, that would be uh, a full return to that upper edge where we broke down from here. So just like the drop, we can, if we get above here, it opens the door to return to here. And depending on where shorts step in, if at all, above that upper edge, potential to squeeze this thing higher. Now we're running out of time on the clock, but stranger things have happened. So this is a return to the 1, 2, 3 stack. And potential to rotate on both sides of that balance. So funny. Okay, well, I think NVIDIA news, if it comes in positive, puts us at the higher time frame upper edge, 967. Uh, I don't know. It's freaking laughable. That's what it is. uh, Downside check 22. 22 folds. Then we come back to zero potentially. If 22 holds, we just keep churning up, looking for 967 on the upside. Well, well. So in the higher time frame price ladder, and they've been traded through, so they're less relevant, but they are landmarks that we can look at. We took on the 4 day back. Next upside is settlement. Next side above that is the 5 day back here. 5 day back is the last VWAP that we connected with. Excuse me. That we connected with um, in the ETH. So that would be a retest. 6 days back would be range expansion. And we got to hold this 27 level here. Sellers at 27 or below 27 open the door to a retest at 20. So 4 day back getting a stomp here. Upper edge, we need to see that violated. If the upper edge fails, potential back to the 4-day back and then the 27 quarter level. So looking good to the upside, broke that edge, puts the swing on deck, and potentially the P close above and settlement. Really, at this point, the trade's a higher time frame trade. It's a range expansion, lower retest of the the 20-day back medley here to 20 back rope and a return to the higher time frame upper edge. So it's tempting to try and get in here and put your stop at 31. Um, the trade fails if we find sellers below this edge. It sets up a return to here. So the safe place is to anchor this breakout location, trail behind that. That keeps you in with 8 points of downside that you have the potential to give up. But because it's a higher time frame trade, theme trade, I want to lean as hard as I can on those upside targets, which means I might have to give it a little bit of room. So I'm willing to give it the 27 check, maybe even 26, 25, somewhere in here to see if we get that upside. And Nvidia, if they have reasonably good earnings, and why wouldn't they? They've had earnings beats for like the last 6 reports. If they do, it makes sense to hit 59.67 upper edge and maybe even further than that. So I want to try and stay with it as long as I can. So potential down to that drop check or launch check. Break above this micro edge, puts the swing on. Sellers at this micro edge put the retest of this breakdown location or breakup location. Want to see buyers step in, put in a new high, kind of erases any ideas of lower prices. As long as we're below this edge and not taking out this high, the potential exists to come down and expand range on this location here. This is the most likely place for it to come. And then we either push up and pop the edge out from here, or the trade's done and we have the potential to rotate then deeper into the field. So if I didn't want to have my stop here, it would be below here. that's 17 points of MFE, which in a higher time frame theme might not be the end of the world because we have pretty significant upside, uh, another 30 points potentially to the upside if this thing goes the distance. That's funny. Okay, our location is now even with the low here. So it's going to look like a double bottom in that micro time frame. I expect a rotation off of this. And then I want to see that upper edge get blown out. If the upper edge doesn't get blown out, or if sellers come in and take it down, I'll be done. If the upper edge gets blown out, I'll be in it to win it. I'm giving it a little room on this pick here. And as soon as we get an impulse away from this, that'll be my stop. I'll tighten right up on top of that. I want to see this go through and make a high, or that'll be it. That's as much as I give back is that swing there at 27 and a half. Which is fair. I mean that's 10 points. But I need to keep this thing uh, I want to give it room enough to go in and try and push that edge, because if this edge pushes then and the swing takes out, then we're back in and the stop will come below this rope here. So that's just a way to slow roll this. But it's critical here. We have to get below this or get above this edge, or the upside might be done. For now, for this rotation. So 33 and a quarter is the spot. If we make a new low here and find sellers under here, then potentially down to 22. Here, this is our move right here. Need to see this thing break the edge. Pretty nice impulse up. That was a 25-point rip off of 0-day back. So we're getting that break. This is further squeeze potential. We are in the middle of the squeeze. The squeeze started here. If We take this edge out, we're squeezing shorts from here and here, and above here continues the squeeze from all the shorts in this higher time frame leg. So all the way back to 8 days, 9 days, 10 days ago, the folks that shorted this market down here are fuel for this move back up, and we'll keep drawing them in. The shorts will come in and they begin to get squeezed here, and this move will end when we stop making highs and the shorts start piling in, overwhelming any of the new longs that are coming in. So right now these dips are getting bought up, potential to pop the top off of this and keep going. Now we've made contact with this location here. The last time we touched this location is right here. I can drop another VWAP on top of this location here and use this potentially as a place to trail behind. It's going to be more micro and it's going to keep us at a tighter stop location. But we really have to actually, I'm going to go back to here. We really have to uh, pick a place to be willing to trail behind. So if we lose this, it opens the door to this. If this holds, it opens the door to higher prices. Now we put in a slightly higher high. We got to check on settlement. Settlement's been traded through for like a half a day now, so not particularly relevant. So this puts that upper edge on. This upper edge, buyers above that, puts a swing on. And this is just pure squeeze here. Look at the stops getting fired. Pretty crazy. Pretty crazy. Okay, so we got another stomp right here. Micro stomps, and we can micromanage this thing, but had we micromanaged this thing, I would have been out here, but by giving it the test, now we've expanded range another 5 points on top of where I would have gotten out. 34, more than that, 8 points. And we're only at 5 days back, so range expansion is to the 6 day back, and then it's a hop, skip, and a jump up to the upper edge. So we've got range expansion here down to settlement where the VWAP's starting to tighten up, and then range expansion from here down to here where the VWAP's where there's a rope and they really start to tighten up below. This is range expansion on this structure here, potential to come back and retest that. Be very bullish if it were bought up here. It's still bullish if it's bought up here. If we lose that, potential all the way back to here. And if for some reason we thought, well, I don't want to give this up, then the thing to do is to take it off up here or up here. Because if we lose these, this is the next check. And we should really stay above this if we're going up. Like we shouldn't, if we get below this, it opens the door to return to here, or at the very least to 19 and a quarter, where we broke out from. So we have balance here, return to balance, potential to rotate on both sides of balance. Push down, back to balance, potential to rotate on both sides. Reject balance, look for a deeper price cut or dip. If this edge sells, we're probably coming back to check this. If this edge buys, then this is balance. We've sold off from balance, potential to rotate back to balance, and then to the other side of balance. Sellers here, brings us back to this balance, potential to rotate on both sides of that. If this balance fails, where's the next one? Right here. We don't really want this balance to fail. Delta is flipped magnificently. We were at negative 8,000. We're now at negative 4,000. So we're squeezing all the shorts out. And we have to get through this edge here, or the potential is back to 30. We want to see buyers above that and buyers above this. Put this on deck and pow, pow, pow. Keep on squeezing, baby. So we need to see range expansion up to the high, back to balance at this edge, opens the door to return to balance, balance, and balance. So we want to keep seeing these edges getting pushed. But the in it to win it stop position is below this edge, this VWAP context edge. Now we've got a lower high here. This is concerning to the upside. 5-day back is the VWAP that got sold today. Price was higher. I think it was up. Where's PI overnight high? So it was up here. These VWAPs have dropped down, but the algorithms that are programmed to sell them levels are following the VWAP, is my thinking. So lower high here. We had a lower high here too. So lower highs aren't an issue, but just something to note. Uh, back to balance. That's the most important thing. So we lost balance, and now we're coming back to this balance. If we lose this balance, then we come back to this balance. If people buy balance, they return to this balance, so 38. And then we need to see buyers above 38 this swing and high of day, or there's potential to come back to here. I mean, at this point, we got 11 points into it down to that edge. I think it makes, for me, good sense to try and ride this thing out. I'm going to take this off because this is less relevant because we traded through it here. The potential is to balance out above this VWAP, and if we lose this VWAP, then it opens the door to a retest of 0 day back. And we've got the close coming in and Nvidia, so this is choice point time. Do we just scrap the trade here at 34 and a quarter and call it good, or do we pull the stop back, anticipate positive earnings for Nvidia, and give this thing some room to work? Those are all important questions. So potential back to 0 if we find sellers below 31. Not just price dipping off at 31, but like break underneath and reject. I'm hearing some buyers coming in here, getting a little basing out in this price action here. It's become rotational around balance. And we squeeze. And we got Nvidia coming up here. So uh, I have a I have a target up at 8 days back, 64. And I'm going to let this thing ride all the way up there if it goes. It might come back and take me out. That I don't care about. I got my lunch money. And we're getting a squeeze again. So sellers getting wrecked. Intraday sellers getting wrecked above this level. And as we push up, we got P high here at 47. There's going to be a stop pick above that. We got overnight high. There'll be a stop pick above that. So if we can get P high, that'll give us a 6 day back check for range expansion on the higher time frame price ladder. And Nvidia about to report. Let's see, what time are they reporting? At 4 p.m. Central. So they got an hour. This thing's got an hour. Uh, it could go to the moon. It could be done here. I think I think what we just saw is a squeeze. in anticipation of positive earnings coupled with shorts, counter trend shorts that were 8 days of counter trend VWAPs above us, and those average prices getting wrecked. All right, well, we expanded range and now potential to go through the easy money back to the check here. If we lose that, back to here. If we lose that, back to here. So we have three levels to choose from. We can stop here, we can stop here, we can stop here, or we can be flat on the range expansion for the P high. And we still have negative delta, but we have had a monster squeeze of all the shorts in the market and shorts from yesterday. So if we look at the delta here, uh, we're still like disastrously short compared to yesterday and 2 days ago and 3 days ago. Now the combined total of in blue of yesterday plus today is actually higher than 2 and 3 days ago plus today. But we can stay in this thing if we know where the rotations are coming, we know where the likely checks are for price. We can we can decide if we want to eat that big of a rotation or if we want out. And we know what we need to see here. We need to see this edge get violated in a new high. If this edge doesn't get violated, then this is the check right here. So putting your stop right here is worthless because if this edge doesn't hold up, then we're probably coming back to here. So if you're not willing to put your stop right here, take the trade off, be done. Micromanage it. This swing here at 40 is 2 points away from 38. But the temptation is always to like choke up on 40. I'm just not sure if that's the best approach. We still have very negative delta on the day. Breakdown, rejection, micro, boop, boop. Breakdown, rejection, potential then to come back to this edge here. And since we're after hours here, the low volume environment, this price is going to move slow. But that's the price check there. So 38, 36, and 32, all awaiting the NVIDIA results. So that's pretty much it. I'm sure a lot of people didn't see it coming, and when they saw it, they didn't understand why it happened. But there it is. That was the squeeze. right, here we go. So we got our NVIDIA results. I don't even have to see them to know that there are people positioning here. I got stopped out just below this level here. That suggests a return to the 0-day back and the stomp of this upper edge. So that's it for me on that trade. Um, doesn't mean that we're not going up. NVIDIA results are going to be what they are, but it was a valiant effort. And I mean, I gave back 10, maybe not even 10. 32, more than that, 13. But I cashed in on the other 20, and then some. So nice range expansion, a retest of the 5-day back. We didn't get the range expansion here. Glory be. I was yammering with no button push, so I took the long off of the 0, 1, 2, 3 stack here. Um, excuse me, this is probably not the best chart to look at. So we have failure below here is where I took my stop out. Came down to here, the 0, 1, 2 stack, took the long. I scaled at 3 points. I scaled in front of this upper edge here, and I've got one more for the 67. And this contract is at break even on the trade, and I'll leave it here and let this thing work because I think it's going to go up overnight. At least I hope it will. So this is a free trade back to the 1-day, the 0, 1, 2, 3 stack. I don't have to do anything to it. Target is 67 1/4. so again here, 0 day back, below 29 and a quarter, opens the door to a full retracement back to zero. If we lose this lower edge, full retracement back to zero. Those are the two areas that you could stop behind if you were unwilling to leave your stop down below the swing low, and it fails at the swing low, not here, not here. So if we lose this, the potential is to come back to 0 day back. So the only safe place to have a stop here is below the swing. If it's at all safe, because the check is on 0 day back. So we want to see this get bought up. If this gets bought up, it opens the door to the upper edge. If it gets sold, then we should come back to here. And I really want to look at Nvidia's earnings because I feel like they came out and they weren't the best. 30 billion over 28.8 billion, so a couple billion. What's a couple billion between friends? Uh, Nvidia did not rally hard off of that. It's coming off of the low. Yeah, well, they had like 6 billion extra in earnings. I don't know why it didn't just go to the moon, but that's the way it is. So, short of a stop here, a stop here makes good sense because the potential is if we lose this, then to fill in the space. So I've given it the pop down. If I wanted to, I could come up here and trail at 24. I do think this has the potential to go up, and I'm willing to take a chance on it just because what have I got to lose? Potential upside.